All right, good afternoon. My name is David Wiley with ULTradez, and welcome to my daily review. Today is Monday. It was a long day. It feels like a whole week went by today, but it's only a Monday, August 7th, and today is my trade review recap for the day. So if you're new here, welcome. The purpose of this channel is for me to document the process that I'm going through as I attempt and work towards getting 20 Apex accounts fully funded. So every day I provide, every trading day at least, I provide a trading recap of my day, the trades that I took, the lessons that I learned, based on the strategy that I learned from another gentleman by the name of Bob Anderson, who posts all of his information for free on YouTube. You can look him up. Great guy. And so that's why I'm here. So let's get into it. All right. Today was not a great day. Unfortunately, it was a red day. This is a little tracking sheet I concocted for myself. I did a video last night, which would have been Sunday night, and kind of went over my game plan going into the week. And I walked through this, so I won't do that again. You can look up that video if you'd like. But basically, what this shows is, this is day one. Started sort of my day counter over at day one today. My P&L, I end of the day $328 negative in all but two of the accounts. So we're only $265 negative. These accounts here did get lost today, which I wasn't entirely surprised by. I wasn't really counting on them to survive. It's unfortunate they're gone, but it's not entirely unexpected. So we still have, right now we're working with 12 accounts, and this account here in the yellow is down the trailing threshold, which is this column here. I only have $161 before the trailing threshold catches up to me, so it's unlikely that this account will last very long. All the rest of the accounts are still in decent shape. Nothing too concerning yet. So we'll go through it today, or I'll go through my trades here in a second. The gap right here just shows how far I am from hitting the profit target for the account in order to get it funded. So these two are the closest. Everything else is kind of behind. And then the daily target shows how much I would need to make per day to get the account to get through this process within the 7 days. And so this daily target is the gap, what I have left to complete, divided by 6, because that's the number of trading days left in my little 7-day window here. And so that's showing me I would need to average $639 a day over the next 6 days to get these guys funded, which is, I mean, that's a pretty tall order. That's, you know, we'll see. That would be a difficult target to hit, but you know, it is possible. I do have three kind of cushion days. So I really have 10 days in order to get these done before I would have to trade for another 10 days in order to get a payout. So that's, again, that's all in my other video, so I won't go through it, but that's what this daily target is. It's the amount I have left to make in the account to hit that $3,000 in profit in the next 6 days, as of today. So that's that. So let's go through the trades real quick. I won't spend a whole lot of time today. Most of my trades are actually in ES, but I want to go through these oil trades because oil, I mean, this is summertime, which is, it's just choppy and difficult to read. Things don't work as smoothly as they do at other times of the year. On top of that, I will admit I came into the day feeling, I don't know, you just have those days where you just feel off, right? You're not quite in the zone. And today was definitely one of those days for me. I knew I had the feeling coming into the day that I just wasn't firing on all cylinders. And I think it showed. And it showed, first of all, because I missed two really good setups. The first one, I just wasn't watching. So it wasn't that I chickened out and didn't put my order in. I just turned away for a few minutes and I missed it. And so but I just wanted to show that to you. So here we have the this is my opening range box, right? Which really just shows the open price movement within the first 15 minutes. And so pre-market, we kind of started down here. We came up here to create this sort of recent pivot high. And then price pulls back really nicely into our 5-minute gold line, which is this 9 EMA based on the 5-minute time frame. All right. It does not break the pivot to the left. It like taps it. If you look at the bottom of these candles right here, it went exactly to that spot on this candle before it started to pull back. Okay. So we had price cross the EMAs. We had a cross of the EMAs. Well, the EMA and the SMA, the moving averages. And then we had price touch the 5-minute gold line and pull back and rocketed up for 19 ticks. The entry would have been 1 tick above the candle that first crossed through the moving average. All right, so your entry would have been at 82.19, and I believe it went to 82.38. Yeah, 82.38. So 1 tick shy of 20. My target is 10. So that would have got it there. After that, price breaks down. I almost took this open range break. Oddly enough, ironically enough, I didn't, because it's not, the trade setup I'm looking for. But I saw this sort of descending wedge, and that's a pattern I really like in these scenarios, especially when you see the moving average is coming down. Everything's showing price wants to move down. So anyway, what it does set up is a nice trade into the 1-minute 9 EMA, this 1-minute gold line. Price comes down, creates a recent pivot low. We haven't been there for, since before the market opened. We have price pull back very smoothly to this moving average, okay, which means the tops of these candles stair step into it. There's no chop. And then price breaks down and just falls. Okay. I mean, I think we went 30 ticks on this one here. That would have been a great entry. I only needed 10. Anyway, so those were the two really good trades. I mean, they were very clean setups. And they both happened pretty early. This one was 8:10 in the morning Central. This one was at just before 9 a.m. Central. So very nice trades. Let's see. Here's the trades that I took. So I waited through all of that chop. Finally, price pushes back. It crosses the moving averages again. Recent pivot high, pulls back down into the gold line, or the gold line. This 5-minute 9 EMA. I enter with a half a position, so 2 contracts in my $25,000 account. It'd be 4 contracts in my $50,000 accounts. Because honestly, I wasn't too confident in it. The reason that I wasn't very confident in it is, remember I talked about the descending wedge before? This one isn't as clean, but this was the red, I don't know, kind of the caution light for me, which which is why I only took a half a position, but I took the trade anyway because it was technically my setup. Okay. So this is the wedge. Price comes down, but you have this candle here that pokes all the way down and then pulls up, and then these ones continue down, pull up. I mean, the fact that all these candles are hitting the kind of same spot at the bottom, that makes me nervous. That shows me price is getting ready to fell, which doesn't bode well when you're looking for a reversal or a rejection off that level. So it did. It stopped me out. I did trail the candles with my stop loss. So I got stopped out for 8 ticks instead of 10. So that was the good thing. Then price moves up here. It comes back down pretty nicely into the gold line again. This is like the second touch, right? Because here price closes below the EMA. All right. So that's a reset of our touch counter. Meaning that once it comes back above, we have our first touch here. We come up, we come down, we have our second touch. Now in this case, we have a third touch, a fourth touch, a fifth touch. but the trade plan rules state that you only take the first and second touch. You do not take the third touch. So this second touch works. Plus it's on this nice small candle, which I really like because it provides a nice tight stop opportunity. I get in, and you see it pushes up. It doesn't, let's see. So the entry is 81.92. It goes up to this high here at 04, so 12 ticks. So that's my 10 ticks, okay? So here's my first big error for the day is I did not take my profit, which is unfortunate because, again, we expect these to potentially go 20 ticks, which actually this one does. I mean, if you had got in here and you had left your stop loss down here, I mean, you come back down to like this break-even spot like twice, but eventually it does push up and you would have got 20 ticks. And 20 ticks is really what we're looking for. I'm going into it with more of a scalping mentality, so I'm really only looking for 10, and I get 10, but I'm greedy and I'm holding out for more. It comes down here, it comes back up to my 10. It comes down here, it comes back up to my 10. It comes down. I mean, I had like multiple opportunities to get out of 10 ticks. I didn't, but I did trail my stop at the bottom of the candles. So I did get a little bit. I think I got, I don't know, 4 or 6 ticks or something on that. So small win to help offset the previous loss. And that was my only trade in oil. You know, there wasn't really, I didn't really see any, you know, nice clean entries. You know, there were some. I mean, this one would have technically qualified because price breaks down below 21 SMA, comes back up for a test, and then comes down. It's super choppy and it's super tight to the line. So I wouldn't have taken it, but it does technically follow the rules. So that was oil. If we want to look at, so I'm going to pop over here to have all this stuff open. Oh, did I pass it? I did. Hold on. ES. Okay, so ES is where I took most of my trades. I'm not going to go through these because I had, you know, small winners. I had, you know, this was a break-even trade. This was a small winner. But the one thing I want to point out, just like I didn't take my profit at 10 ticks in that oil trade, I had the similar opportunity. So I got out break-even here, so that's fine. I got out break-even here, you know, that's fine, I guess. I think I actually could have just held on to it, but got out for break-even, which is, you know, better than losing. Here it does go 10 ticks and I don't take it. Okay, I get out for just a small profit. This was just a bad trade that stopped me out. In here, I get in here going short. I get my 10 ticks, would have been somewhere around here. I don't take it. I come back, break even. So if I had taken all of the 10 tick opportunities that I was actually in the trade, these aren't even just, you know, potential trades, but moments when I was actually in the trade, and I didn't take the 10 that the market was giving to me, and instead I ended up either breaking even, you know, maybe some small wins and sometimes a loss. If I had taken those 10 ticks every time, I would have ended the day green. So that was the lesson today. Take your profits when they're available to you. Don't get greedy. And that's it for today. So, I mean, it wasn't a great day, but it wasn't a bad day either. You know, we'll take these lessons. We'll come back stronger tomorrow. And I hope you do too. Hopefully you had a better day than I did. And hopefully you trade your plan. Make sure and trade safe. And we'll talk to you tomorrow. Bye-bye.